what I've noticed, and let me take you through a risk disclaimer real quick, but obviously you guys know this, there's risk involved in trading. So again, one thing with Nadex that you'll see here, when we talk about futures and options trading, how you can lose more money than you have in the account. Well, with Nadex, every trade is a defined risk trade. And so that's their big thing, is defined risk trading. The mission of the trading pubs provide a place for our patrons where you guys can hang out with some of the top traders in the industry. While you're here, we want you guys to learn about the markets. We want you to enjoy your time here. And we also try to put a focus on charitable giving. If you want to stay up to date with us, our website is tradingpub.com. For those of you that are in the Twitter sphere, it's twitter.com/tradingpub. We just started doing some educational videos. We'll do some daily educational videos, and I'll probably do today's video after we have our session. And then facebook.com/tradingpub as well. And what we do here, we'll post copies of our recordings, notices of upcoming events, some free education. All the stuff that we do is free, and so hopefully you guys will enjoy that. So again, like I said, you can click there, click on that link, the YouTube link for the market videos. But what I'd like to do is really just kind of show you, I'm going to pull up the Nadex platform and talk about a couple different things, and then I'll show you a kind of a strategy that I've been using the past week. And let me get this here, monitor 2. Okay. Let's see. Okay, can you guys see the screen there? Just type in a yes if you can see it. Okay. All right, good deal. First of all, here's a look at the Nadex platform. And what I want to do, like I said, during my session today, I'm going to really focus on binaries. And so the way that the binaries work, and I'll just pull one up right now, is basically on a binary you're looking at, are we going to be above or below a certain price? And so here you see this is the US 500, which equals the S&P 500. It tracks the ES futures. Okay, so the US 500 on Nadex is going to track pricing on the ES futures. So if you look at this right now and you see that this binary, and now again keep in mind that these times mentioned are Eastern time. So you see this binary is going to expire at 10 o'clock. Does everybody see that? Okay, and let me get the little drawer out there. Okay, so you see 10 o'clock. Everybody should see that. That's what time this binary option is going to expire. So at 10 o'clock, we'll see this binary option, so 9 Central. So we've got about 22 minutes left on this binary option. Now, if you look at it right now, it's trading at 28. So that's the offer. This is the bid. So you've got a bid and an ask. So bid is the price that you could sell it. Ask is the price that you could buy it. So if we wanted to buy this, okay, so if we wanted to buy this option, let's say, and why would we buy this option? Who can tell me why we'd buy this option? Would we be bullish or bearish if we bought this binary option? So again, would we be bullish or bearish if we bought this binary option? Bullish, right. So what we would be looking for, we would be buying it thinking that by 10 Eastern, we'd see the S&P futures above 1408.30. So that means that for us to make money, we would need the S&P above at 1408.50 or higher. Okay, does that make sense to everybody? So again, we need the S&P at 1408.50 or higher. So basically, what we would need to see there is see a rally in the S&P. You can see that we're below it right now. Now you might say, well, why is it trading at 27 right now? Well, because you've still got some time. We've got about 20 minutes to go. If we see the S&P trade up to 1408.25, and this is a good rule of thumb, get trades at the strike price, that option will be priced at 50. So if we see this option trade up to 1408, anytime between now and the end, you'll see this get closer and closer to 50. So basically, when you're trading right at the price, if you think about it, it's basically a 50-50 probability. So if we were to buy this, let's say that we were trying to go ahead and buy it here at 34. Okay, if we were to buy it here at 34, it tells us our max profit right here. Okay, it tells us our max profit and our max loss. So if we pay 34 for an option, the most we can lose is 34. So this option is either going to expire at 10 o'clock, it's either going to expire at 0 or 100. Okay, so if we're above 1408, it's going to be 100. If we're below 1408.30, then it's going to be 0. So even if the S&P rallies but doesn't rally up enough, then this option will be at 0. Now, if we trade to 1408.50 right before expiration, this all of a sudden that we paid $34 for would be worth 100. So our max profit would be $66. And here it tells you ceiling and floor. So again, 0 to 100. Does everybody understand that? Type in a yes. I want to make sure everybody's following me. Okay. Okay, Benjamin, how do you define the bid-ask price? Okay, the bid is, think about it this way, just like in other trading, it's the same way. Bid is people willing to buy it at a certain price. That's a bid. An offer is what people are willing to sell it for. So that's in order. Right now you've got 20 people willing to sell this at $17.50. You've got 20 people willing to buy it at 14. So if somebody's willing to buy it so if we want to buy it and we want to get filled immediately, we've got to pay the offer price. Okay. Now the good thing about Nadex is everybody's essentially a market maker. So we could say, okay, we're trading at $9.50 by $12. I could put this in at $11 and see if I get filled. So I could work a bid or I could work an offer. But again, the way I typically trade is, and this is the majority of the time, I usually just pay up and take the trade. So again, I'll take Benjamin. I want to make sure you follow. Okay. All right. Now let's look at a couple of different things. And okay, it doesn't. Think about this. A bid equals someone buying at a certain price. Ask, also known as the offer, is someone selling at a certain price. Okay, so if you were, think about this, if you're to bid on something, you're trying to buy it at a certain price. If I'm offering to sell you something, or I'm asking for a certain price to sell it, then that's the ask. So the left side is the bid and the right side is the ask or the offer, and those are interchangeable. Does that kind of make sense? Just, are you following me to this point? Okay, okay. And so the way to think about it, if let's say that this is you on the bid at $4. So let's say that Benjamin's bidding $4. You want to buy this at $4. Well, in order for you to buy it there, you need someone to sell it to you. So if I were to sell it, then I could say I want to sell it at $4. You want to buy it at $4. All of a sudden we have a trade. You bought it and I sold it. So again, that's how the bid and the offer works. All right. Now let's look at a couple different things, and here's the thing to look at is just a trading opportunity. This is a chart of that option that we just looked at. All right, and you can go long or short, so you could buy it or you could sell it. Okay, here's a look at it. Notice that we traded at 20, we traded up to 40, we came back to about 27, we traded up to about 45, and now we're down at $4. So these things are extremely volatile. If you think about the percentage type moves, these things are extremely volatile when you get close to expiration. So again, there's lots of good trading opportunities. Now, here's kind of what I've found, and this is just me personally. I tend to do better if I trade a longer term binary option. Okay? So I tend to do a little bit better if we've got 17 minutes until this binary option is going to expire. Okay, if we've got 17 minutes, it can be very tough to trade because you've got to be right on your timing. So if you were to buy this thing at an issue a lot of people have, they initially think, okay, well, I'll buy this at $8 and I can make 91 bucks, but I only have to risk $8. Well, this is essentially kind of like a lotto ticket, if you think about it that way. You're paying a very small amount to try to make a lot of money. And think about this, how often do people win the lotto? Right? That's why they call it a jackpot, because every now and then you'll hit it. But the majority of the time you'll lose. And I'd be willing to bet, and just not even watching the market, I'd be willing to bet that this contract will probably expire worthless. Now, it can be good sometimes if you hit it, but probably 9 times out of 10 you're going to lose on this trade because of the fact that it's so far away. So you need a huge move just to make money. Now, what I will typically do is go more and look at the daily binaries. And here's a couple things that I look at. I'll look at buying options priced around 80 and selling options priced around 20. And you might say, well, why would you do that? Well, let's look at this. Let's say, let me pull up a chart real quick. Okay, here's the gold market. All right, here's the gold market. And so what I'm looking at here is I've got gold at 1680. I think that 1690 is a pretty good pivot area. Okay, so I think that probably 1700. So let's go look at gold. And this is a trade I did last week several times. I'll go to commodities, binaries. I'll go to gold, and I'll click on daily. Now the gold daily are going to expire at 1:30 Eastern. Okay, so gold daily expires at 1:30 Eastern. Now looking at these, I've got 1688 at 13 by 18. I've got gold above 1670 at 89 by 94. I've got gold at 1673 at 86. So let's look at this and say, okay, I think gold's going to be above 1673 today. So if I go and look at this, and say, okay, gold's at 1680 right now. You know, we had a low at 1674. All right, we had a low at 1674 on Friday after that big move. We've got a low today down at 1672.50, and we've got a high today at 1685. Now, here's the thing. Here's kind of my thought process on gold. You might not agree with this, but what is tomorrow? What happens tomorrow? Yeah, we've got the election, right? So would you guys think that Wednesday will probably be a pretty volatile day? Probably Tuesday night and Wednesday will probably be pretty volatile because of the election? Right. Yes, I think everybody would agree with that. Now, here's the thing. Do you guys think that we're going to be real volatile today and tomorrow? Or do you think the market's probably going to be a little bit slow? Right. I would tend to believe that it's going to be slow. So am I going to want to take trades where the market has to move a lot for me to make money? I'd probably rather take trades that kind of put the market in a range. Now, gold typically, what I'll do, and this is what I did last week, is I basically bracketed the gold market. And so I'll bring Nadex back up. Like here's, for instance, here's a contract 85.50 above 90 at 90.50. So what I did last week and again, I don't know, I'm not too crazy about this trade, but I'd put a buy in to try to buy one at 90 bucks. And you look at this and you say, you know, you're making 10 bucks, you're risking $90. Is that really a good trade? Well, here's the way that I trade these. If I see gold break a certain point, I'll get out of this trade. So if I see gold start to break below 1675, then that tells me that this will probably be priced around, if I see gold at 1675 anytime between now and 12:30, that means that this will more than likely be priced around 60 to 70. Okay, it'll be priced somewhere around 60 to 70 because I know at 1673 we'll be trading at 50. So more than likely, if I see gold trade 1675, then this will be around 60. So really, it's like I'm risking about 20 bucks to try to make $10. And I know I see Charlie Finn in here. As an option seller, that's not too bad because this is a high probability trade. The key, and here's the real key with these trades, what you don't want to do, if you want to be successful with a strategy like this, you cannot let the thing get to that max loss. You know, you can't watch gold come down below 1673, trade to 1670 and think, oh, it might come back. You know, you've got to be able to pull the trigger and take a loss if you see gold start to trade down. So again, that's the key to selling premium. Charlie Finn's in this room. You see him logged in. Charlie's a professional options trader. And so what you see there is you've got to be able to step in and say, okay, I need to get out and I'll take my loss. So now here's kind of the way to look at it. Let's say that we bring in $10 here. Okay, let's say that we bring in $10 here. Then we go up and we say, okay, I don't think gold's going to get back above 1691. So I'm going to sell this one for, let's say, $12. All right. So I'm going to sell this one for $12. So let's see. So we've bought one for 90, and that would be a $10 profit, right? If we sold one for $12, that would be a $12 profit if we're right. So equals net profit, if right, at $22. Okay. Now I just told you that my risk was basically about $22 if I can manage the trade. Now if I don't manage the trade, or if we have a flash crash, worst case I'd lose the $90. If this thing just fell out of bed and I didn't do anything, I could lose $90. Well, my net profit now, this is kind of, for those of you that trade options, this is kind of like an iron condor. So you can't be wrong on both of these, because gold can't be above 1691 and then be below 1673 at the same time. Now it could be between it, and you could make money on both sides, and this is what I did a lot last week, because I didn't think the market was really going to be moving much. And so when I think the market's slow, like I think it's going to be today and tomorrow, this will be a strategy that I really look at. I'll try to find both sides. Now I'm not crazy about the gold. I'm not crazy about these gold prices, because you've got to get pretty close, and we had a pretty volatile day. You see right now we're trading at 1682. So again, if I could get down to about 1670 and then 1695, I would like that trade. But right now, if you look at the pricing, it's not really enough to make it worth my time. You know, if you look at the 94, it's only $7. That's not really worth taking that trade. Now, the 1691, it will be interesting to watch. You know, if we trade up and I see 1691 get to about 15, $16, it might be something. It might be something that I end up doing, but you know, I feel like it's kind of a little bit too close. So let's go look at another market. Let's go look at the S&P. You see here, here's the one expiring at 10. So let's look at the S&P chart. All right. So you see the S&P chart. We had the big day yesterday. I think that the big prices here to watch are going to be 1416, 1420, and then down below 1395. So I think anything below 1395 is going to be pretty tough to get to today. So let's look at this. And obviously this is the shorter term one. You see the 1410s basically trading at nothing. At 1403, so you see this one around 50, and we're the 1406.90, so 1407 that we could sell would be at 22. Well, if we look at this right here, we're at 1403. We've got a high so far on the day at 1409.50, so we're a couple points there. Okay, so let's look now. And remember, I told you, I feel like it's hard. The shorter term you get, the more volatile and the riskier it is. So let's look at a daily option on the S&P. Okay, let's go out to the daily. Now, we can look here. We've got the 1414 S&P that's trading at about 1050 by $13. All right, now to the downside, we look at, here's the 1493, okay, or sorry, 1393. So that's below that 1395. So that would be an option I could look at buying and doing that, and kind of taking a look at the bracket, the 1393 and the 1414. For a net of about $22. All right, so basically if the S&P ES futures close anywhere above 1393 and below 1414, that's a max profit. All right, so your max loss, looking at that, assuming, because it can't get both sides of you, so your max loss equals, if you bring in $22, your max loss equals $78. So you look at it and you say, well, my risk reward, you know, I'm basically risking $1, or I'm risking about $3 to make $1. And the thing is, you've got a pretty big cushion there between 1393 and 1414. So you have plenty of time to act. Now, let's say that the market trades down to 1395. Okay? Let's say the market trades down to 1395. Okay, if it trades down to 13.95, then chances are this 13.93 option is going to be going against you, and you might want to bail that, and then the other one will pretty much be worthless. So again, in a market like this, with the in a market like this, where I feel like the market's not going to move much, that's kind of the strategy that I'd look for. Now, if I'm bullish, let's say that I don't think we're going to move much, but I'm bullish, all right, then what I might look at doing is just do one side of it. I don't have to do both sides of it. So I could just say, okay, look, I think this thing's going up. I'm just going to do this side. I'm just going to buy this at 86.50 and make my 13.50 here. And again, what I'm showing you is in one lots. You can trade 2, you could trade 5, you could trade 10. Okay, so if you did this trade on a 10 lot, the S&P closes above 13.96 today, you'd make 135 bucks here. Worst case, if the market crashes today, you'd lose $865. So again, that's one thing I like about Nadex. It always tells you your max profit and max loss. So if you lose internet connection and the market goes to 0, your max loss is right here. It's 865. So again, that's a very helpful tool in my opinion. Now let's look at one more thing. We'll look at crude oil. Let's take a look at crude oil. Okay, put gold up there. All right. Okay, here's a look at crude oil. You've got 85. All right, you've got 85. We've got resistance up here at 86.50. We've got support down probably below 84. So, good morning, Daryl. Let's go look at crude oil. Daryl, just to kind of fill you in, I've been covering binaries this morning. To them, I thought you might show them some things about the box spreads, but basically what we've decided is, Daryl, you might not know this, but there's an election tomorrow. I'm sure you haven't heard that or haven't seen any TV ads or anything of the sort, but yeah, there's an election tomorrow. And so, yeah, so our thoughts are with the election that we'll probably see a slow day in the market today and tomorrow, volatility, but the markets will kind of just process what we've had going on. And so we were looking at kind of some higher probability strategies, right, neutral type strategies of bracketing either gold, bracketing the S&P. Now we're going to look at crude oil. So you look at crude oil, and we'll look at I'm looking at the spreads. There's commodities, binaries. We'll look at crude oil, and we'll look at daily. Now crude oil is going to expire at 2:30 Eastern. All right, 2:30 Eastern. That's 1:30 Central. So again, remember the numbers we were looking at on crude. We're trading at 85. We know that this kind of 85, 50, 86 area is resistant. So if we're going to take a neutral strategy that we want it to stay below probably 86 and anything above 84. Now let's see if we can get any pricing. And we looked at gold, and we really didn't find a great setup. But here's a look at crude oil. You see here's the 85.50 that's trading at 23. So we know that's resistant. So basically, let's talk about that trade. So if we were to take that trade where we sold it, what we would look to do is basically cover that trade if we got to 85.50. Okay, so basically, if it got to 85.50, we would look to cover that trade, and it would be about 50, right, based on expected move, right. So if we go to the bottom side, if crude's above 84.50, all right, okay, 84.50 here, we can pay about 80 and bring in 20 bucks. Above 84, and that's really what I'd like to do above 84, but if you look at the pricing, it's really not worth it to pay up to 95 bucks and only make 5 bucks after you pay the $1.80 commission. So basically, if you look at it there, it's really not worth it. Do I want to take the 84.50 and 85.50, or do I just want to take the 84.50 and kind of looking at it, looking at crude here, we've got a low on the day at 84.34. We've got a high on the day at 85.38. Are we going to stay in this range or not? And that's kind of the question that you have to do. And Benjamin, I'm really glad you enjoyed it. Yeah, we've been doing more on YouTube and on futures as well. So I hope that I showed this, Daryl. I think I sent this to you over the weekend, but we set up a new page. It's tradingpub.com/Nadex, and when you put your email in there, I'll send you an email. One of the links included, I send a lot of educational materials, but one of the links included is access to Daryl's video library. So you guys have access, if you want access to Daryl's video library, if you sign up on that page, it'll automatically email you a link to that and some other cool Nadex videos. So basically, you know, looking at things, I didn't see any trades that really jumped out at me like I really want to take this trade. You know, I do kind of like this 84.50 on crude. You know, I like that one. Remember we looked at gold. Another one we looked at on gold. And keep in mind we've got gold right now. Okay, we've got gold at 1683. And so if you look at gold, we had the 1676 and then the 1673s that we were looking at. And I'll show you here. I'll just put this trade in just to show you how a trade processes. Okay, so let's say that I put this in at 88. Okay, so I'm going to buy one at 88 and I'll hit place order. Received, and I can click on working orders there. You see there's my working order. I've got that gold order working at 88, trying to buy one at 88, and looks like we just filled. So now we're filled. So what I've got to do with this position, I'll have to keep an eye on gold, and I want to make sure that gold stays above 1676 today. So I'll keep a close eye. Probably if we see gold start to break the 1676 level, I'll look to want to exit that trade. But again, what I try to do, and here's a look at last week. This strategy really worked well last week. Remember when we had Hurricane Sandy that shut down the markets, and so you had a lot of flat trading. And basically what I was doing, I was taking in premium here and this gold trade, and you saw how we didn't move much until Friday, the non-farm payroll. So again, when you get in a market, and I feel like today and tomorrow will be the same way, that those will be good days for that type of a strategy. I think that Wednesday will not be a good day for a bracket type strategy because following the election we'll probably see some volatility in the market. So, all right, at this time, Daryl, I'm going to turn things over to you. I hope that you guys enjoyed this time. And again, if you'd like to open a Nadex account, you can fund with as little as $100. I recommend funding with either $500 or $1,000, but it's really a good way to get started in the markets, and you can click on that link and open a new account. But it's really a good way to get started. Okay, I tell you what, we'll put a timer up. We'll put a 5-minute timer up. I'll take any questions that you guys might have, and then Daryl will be on at about 9:05. But that'll give you some time if you have not opened a Nadex account. You know, go and open it. It literally takes 5 minutes. They're held on Nadex servers, so if you lose your connection, your order's still out there. And Nadex has outstanding customer support. I know we see a couple of guys in here that have accounts. Their customer support's the best support that I have seen, and I've worked with a lot of different firms. So, and that's one thing, when you open your account, there will actually be somebody from Nadex that'll call and help you with it as well. Okay, how do you bracket the market and how to use the information and how to trade the bracketed prices? So what we did there just was kind of the what I talked about in bracketing the market. Like if we said, okay, I'm looking at gold here and I think it's going to stay above 1673 and I think it'll stay below 1690. So then what I do, I go into my Nadex platform and I would buy the 1673 and then I would sell basically 1691. Okay, so let's say I wanted to do this. So then I'd look to sell, and let's say I want to sell this at maybe 13. So that would be a way to bracket the market. So I'll put that sell in at 13. I'll tell you what, we'll do $12. Sell at $12. Okay, so I'm filled on one of my positions. I haven't filled on this other position. But again, there's my working order to sell it at $12. It's currently trading at $9.50, so it's got to come up a little bit to fill me. Once that's filled, I then would have the market bracketed between 1676 and 1691. Does that make sense to you, Benjamin? And again, it'll take some time to get used to, but hopefully that's helpful. LWS is kind of the strategy, neutral type strategy, a preferred strategy. I'll tell you this, in certain markets it's preferred. In a market like today, I feel like it's preferred. And I could be wrong. You know, we could see gold just absolutely take off in one direction. Personally, I feel like it's going to be slow trading, and I think it's going to be slow trading because of the election. But again, if I'm wrong, I'm wrong. Now, on Wednesday, I probably won't want to do this strategy. On Wednesday, I'd probably be more on the side of buying things, looking or trading the bull spreads that I think Daryl's going to talk a little bit about. But if you get in a market where yeah, that's true. You know, there will be lots of. I think it's probably going to be very close. We'll probably have some challenging and all that. But I think if you're in a market where you're like this, look at this market that you had these past 3 days. This was when Hurricane Sandy hit, and you just think about it logically. We don't think that there's going to be a lot of volatility. If we feel that way, this is a strategy to use when I don't feel like there's a lot of volatility. So on Friday, LW, I did not place this trade. Look at, and what did we have Friday? We had non-farm payroll. So what does that mean? We're going to have lots of volatility. So that is not a good trading strategy. If I'd placed this trade Friday, I would have lost money. So again, if I'd placed this Friday, I would have lost money. All right, everyone. Well, Daryl will be on in about 1 minute. Again, if you want to open a Nadex account, I highly recommend you doing so. And there's the link. It'll take you just a couple minutes, and then you can come on and hear Daryl talk.